Hello, I'm Donna Sawyer from the Finance News Network, and joining me are investment advisors Gary Glover and James Gerrish for their best stock and sector picks for the year ahead. Gary, James, welcome back to FNN.
Thank you.
Gary, let's start with the year that was. The ASX S&P 200 index is currently hovering above the 5,000 mark. That exceeds your expectations from a year ago. How would you sum up market activity for the year that was?
Yeah, I think everyone was expecting a recovery, and I think most people were expecting it to be firmer in the second half. But I guess in terms of getting to 5,400, that's probably exceeded a lot of people's expectations, including mine. So look, market performed very well. I guess at these current levels here, hard to find value here currently. So that makes it a little bit difficult in the current market.
James, did the year play out as you expected it to, or were there a few surprises?
Well, I guess it did to a large degree. We were expecting the index to be above 5,000 by year end, largely around the investment thesis that cash rates were going lower. The RBA cut cash rates to 2.5%. That obviously increased the appeal of high yielding securities, both equities and fixed income type investments. So we did well in that part of the market. Obviously, with any year in the financial markets, there are obviously going to be surprises, and we did see a couple of those this year.
So Gary, looking ahead, what is your outlook for the market for this year?
Yeah, this year's going to be, I think, a significant year in the market. Actually, I think there's going to be some big moves in the market. It's going to be really important to actually get the timing right this year, because I just sort of see, from a trend point of view, the US market's been rallying for almost 5 years now. So off this 2009 March low. So the last rally from the 02 to 07 was roughly 5 years. So we're getting towards the end of this sort of bull run. So I think the market's accelerating here, so I think it'll probably pop higher here in the next few months. I expect it to cool off into mid-year. I mean, the midterm year is seasonally it's one of those things that normally there's a sharp and fast correction in those years. So I expect to see the market have a pullback around the mid-year sort of period, maybe either July or October, something like that. But then I expect it to finish strongly again. And I expect the low next year, the low this year, to be to the low for the next probably 3 or 4 years. So I think once we've had a bit of a cool off here, the picture looking forward here is pretty positive. Obviously, earnings are improving. You've got a lot of the global economies coming out of tough times, so it's not going to be smooth sailing there. But I think you'll see an improvement out of most of those sort of major global economies and sort of pretty firm markets. So I think if you get a chance to buy sort of after a sell-off this year, I think you want to stay long for the next couple of years, because that's where you'll probably make your best returns, I think, into late 2015.
So James, how is 2014 shaping up in your opinion?
Yeah, I agree with Gary. I think it's going to be a pretty positive year. I think the big focus this year is going to be around earnings. Of course, in 2013, the market rallied quite hard on expansion in valuation. So PEs expanded. We didn't see a lot of earnings growth from Australian corporates. I think 2014, we really need to see that earnings growth. It's not uncommon for bull markets to start on an expansion in valuations, and that's what happened in 2013. 2014, we need to see earnings growth start to come to fruition. Consensus expectations sit at 8% earnings growth in 2014. I think that's probably a little bit light on. I think we're going to see, with a combination of the lower Australian dollar and interest rates that are going to remain at, I guess, record low levels around 2.5% for the remainder of 2014. That sets up for some potential for upside surprise in earnings, and that'll set the potential for an upside surprise in where the market goes in 2014.
So Gary, let's drill down a bit now. Which stocks and sectors have been the best performers in your opinion?
Yeah, I guess banking's obviously been very strong, healthcare, and retail is probably the sector that we looked at last year we really liked, so that's had a really good move here as well. So those have been the key areas. Obviously mining services, maybe mining, has obviously been pretty mixed. There's been some good and bad performers in there, so I expect that to kind of continue actually in the next 12 months. So in the mining area, there's going to be some stronger sectors there and some weaker there. But I think energy next year could be one sector to look out for.
James, what are your top stock picks for 2014?
Yeah, I think one of the, main investment thesis we're going to work towards in 2014 is an uptick in non-mining related investment activity. To that end, we're going to focus on areas or sectors in construction, housing and the like. So we've got exposure to Lendlease, LLC, Stockland to a lesser degree, SGP, although the decline in the share price recently to around 360 probably presents a good opportunity there. We then take a broader spectrum and look at transport and logistics. We've got exposure to Qube Logistics, QUB. Toll Holdings also features in portfolios. Origin, AZJ, although it's exposed to mining activity, it's more exposed to the volume of commodities being moved around the country, so we like that stock. Moving a little bit further afield, we think IT stocks are going to IT services stocks are going to do well this year. Gary made a good comment last year in relation to online businesses, seat, car sales, etc. I think you're going to do really well this year if you go down the food chain a little bit, look at the smaller end of the technology area of the market. Companies like Panorama Synergy, PSY, Nearmap, NEA is another one that we like and feature in portfolio. So I think those areas of the market will perform strongly in 2014. Along with, if we see an improvement in confidence, you've got to have some exposure in areas of the market that are involved in investment activity. Macquarie Group, I think, is positioned very well in that regard. If you want some overseas exposure, Henderson Group, HGG, to get you exposure over in the UK market, which I think is improving. From a global perspective, a global fund manager, Magellan Financial Group, MFG, did well in 2013 and is likely to continue to do well in 2014.
So, Gary, what are your favourite stocks for the year ahead?
Yeah, look, I'm actually not looking too much sort of stock specific here because I think the market's going to have some big moves. So I think it's more about sort of looking at, just because the market's going to have some big swings here. I mean, the average pullback in the midterm year is about 20%. So if we get a 20% downswing this year, then that presents opportunities across more of a broad-based sort of role there. I think it's about sectors not to be in, more so than sectors to pick there. I like what James is saying about the IT area, that's interesting. I also think this year, moving forward, it's going to be about new stocks. So we've had a lot more new industrials come to market here. Obviously with market having a tough time in this mining field there, less new mining issues are coming to market. So we're seeing quite a lot of new industrial companies. So I think you're going to see quite a lot more come on board in the next 6 months. I think there'll be there'll be like a new brand, because I guess the market's been pretty similar for a long time now. So normally the top 50, top 100, there's a lot of new entrants coming in and old ones going out. So it's been a while since we've really seen a flow through the market there. So I expect to see some new companies this year head into the market. But I definitely think from probably mid to late this year, you've got to buy a bit more growth, because I think after these sort of years of sort of turmoil or sort of sideways orientation, once earnings start to accelerate, you really need to probably move away from a defensive portfolio and get a bit more growth orientated.
Gary, the market was fairly strong in the lead up to the end of last year, certainly. Are you expecting those good times to keep rolling this year?
I do, but not for very long. Not for very long here. I say normally sort of January, March is typically when I expect in that sort of period here for the market to sort of top out here. So I just can't see the equity markets. Like the thing about the US market at the moment is it actually is accelerating. So pullbacks are getting shorter and shorter, and it's actually getting steeper and steeper. So normally, if you go back to 1987 was the last time we had a market that had this sort of velocity. Commodities, we had that in 07 there, where you started to see vertical moves. The problem with these markets is if you exit too early, you miss out on a potential upside, because the top can be really powerful. So you might miss out on the cream at the top here. But the same token, the markets, they don't they don't go into a classic bear market where they take a year or two to decline. The air comes out of them pretty quickly, so they get sold down pretty fast. So that's why I think this year is sort of it's going to be tricky this year, because you're going to see some big moves in the market. They're going to be fast, but once it's sort of get this clean out here, sort of mid-late year, then that's going to be it. I think equity markets will return to normal. They'll just go back into more normal sort of growth, and they'll just tick higher more slowly, and we'll see in the end of this all this volatile and big swing moves, and we'll go back to a normal equity market.
James, so where are you expecting our key index to finish at the end of 2014?
Yeah, Donna, I'd put a target around 5,800. That's taking into consideration earnings growth of 8%, which is pretty much where consensus sits at this stage. If you do get some upside surprise, I guess, it's going to come from a lower than expected Australian dollar. I think the Australian dollar has obviously been a big drag on corporate earnings over the last 2 years. If we do get an Australian dollar down near 85 cents, that's going to give a big boost to Aussie corporates. So I think that's the big variable factor. I think we'll probably see an index that trades above 6,000 at some stage this year. PEs at this stage are looking fairly stable, so it's all about earnings growth, as I said earlier, in 2014. If that comes to fruition, we're starting to see signs of it now, then the index can have a good run sort of towards that 6,000 level.
And what about you, Gary? What do you think about that?
Yeah, look, I think we'll see 6,000, but I don't think we'll see it until 2015. So I think 2014 is going to be. Look, I think the high we get marked here in the next couple of months, so whether the high that's in place now, 54, 50 odd, or whether we get to say 5,600, I think whatever that marking is in the next couple of months, that's probably where the market's going to finish at the end of the year. So at this stage, I'd say somewhere in that sort of 54 to 5,500 is probably going to be where I think we'll probably finish up. But I think that'll be it'll be heading up and it'll be moving higher, I guess, come December 2014. And I guess, with January 2015, I think we'll be really looking at some pretty high levels. I think going back to the old 6.8 might be possible by the end of 2015. So I expect the all-time high to be taken out by, probably 2015. But it should be an interesting year. It should be quite good actually. It'll be a bit of a trader's market here, but the investor wants to be long here. I think from this sort of June, October, I think you're really going to be long for the next couple of years ahead. I think earnings will be turning up here, and as James is sort of saying there, oftentimes the markets do move before earnings sometimes. So I think that's the case here. So yeah.
Gary, James, thanks so much for your views today, and good luck with the trading year ahead.
Thanks very much, Donna.
Thanks, Donna.